It's pleasant to be right here with everybody. It's wonderful to see you guys. It's amazing that we've had this platform where we can actually kind of like delve into this and try and iron out some issues and discuss some things on this particular forum. So
Anita, for some reason we've lost your video. Could you turn off and turn on your video again so that we have you back on camera?
Okay, let me just work on that quickly. Let me just sort that out.
Yeah, we can hear you, but we're unable to see you for some reason. We were seeing you and suddenly we have a black screen in front of us. If you could just turn off and turn on your video again. We're very excited to discuss the potential of blockchain in Africa.
Okay, just give me a second here. Let me see. Can you see me yet?
Not quite, Anita. I don't know.
Not quite. I don't know. It just cut off. It just cut off just like that. I could see you guys perfectly, and then suddenly my face was just not.
Let's do this, Anita. Why don't you log off this call and log on again? In the interim, I would just request Ian and Gianluca to introduce themselves and just talk to us a little bit about what they feel about blockchain. Why don't you log back into this call till then?
Okay, no problem. Let me log right back in. Let me just log out quickly, guys. All right.
Yes. So just as we wait for Anita to log back in, I'd request our speakers to speak briefly about themselves. So Ian, let me start with you. Could you give us a brief introduction about yourself? And blockchain is very controversial because the technology is not controversial. The most popular usage in Bitcoin, etc., is what is controversial. Is a little controversial in some countries where there's a lot of regulation, etc. So, just tell us about yourself and how you're involved in blockchain.
Well, I'm with Standard Bank in South Africa, and I've been with the bank for 25 years, doing various different things. And for the last 4 years, for all my sins, I started working on blockchain. I run the Blockchain Center of Excellence for the bank. And we've done multiple experiences and experiments. We had lots of experiences globally, working with foundations, looking at all the possibilities for blockchain and narrowing it down to some of the significant use cases that we believe will position the bank and its customers to facilitate growth across Africa. And what we realized is that the thinking today in the world, if you look at banks specifically, there are quite a few banks that's taken blockchain significantly forward. If you look at JP Morgan, DBS, and I think the local banks in South Africa and in Africa is very interested today in new payment rails. Everybody realizes that payments is going to be disrupted significantly in the future. And whether that's going to be utilized through crypto, I think stable coins are going to play a significant role. Every single central bank in the world is looking at central bank digital currencies. And I think what's important for CFOs there is that if you look at businesses today and you look at their balance sheet, they've got the securities and they've got the cash or the settlement components almost running as separate components. And even if you look at crypto exchanges today, they utilize bank to often onboard from fiat into crypto and the other way around. And in future, atomic settlements, I'm not going to talk in too much detail, we've only got half an hour, but your reconciliations are going to disappear. I listened to the speaker earlier that said about robotic process automation. I think if you apply the distributed ledger technology correctly, it will have a disintermediating impact, but it will integrate a lot of processes that we follow today, step by step. And that's also true for trade finance in the value chain, where you've got letters of credit, guarantees, all those kind of financing things. I don't want to, I'm going to give Gianluca a chance as well, but I think that's the general trend. And CFOs needs to be very close to where this is going to go and maybe apply some of those revolutionary impacts on the existing processes. Thank you.
All right. So Anita is with us. Anita, Ian just telling us about, how banks are adopting blockchain for a number of use cases. For some reason, again, we cannot see Anita's video. The moment she comes into the speaker mode, I think we just lose her. Gian, would you like to go ahead and talk to us about your blockchain journey? Countries are coming up with their own digital currencies, but why this is so exciting in Africa is because of this free trade agreement. It's going to be a huge block. So if you're going to have like 55 different digital currencies, it's going to serve its purpose.
It's a really good question. So just a brief introduction to where I fit in this crypto puzzle in Africa. We operate a company called VALR. We're a cryptocurrency exchange that is based in South Africa. That is where we are headquartered and where we started the business. And VALR, our mission is ultimately to give access to all peoples of this continent and hopefully further abroad than just Africa into this exploding space of crypto assets. So we today offer trade in over 65 different cryptocurrencies. We offer some integration into payment methods using cryptocurrency as the infrastructure layer for people to pay between different accounts, and intend to expand that quite broadly into many parts of the African continent. So why we're bullish on the space and involved in crypto at all really comes down to this concept of the world is kind of one global nation at its core. We're all a common people, and something that's been really interesting is the fact that from a financial perspective, that's definitely not the way that human beings behave. Financial infrastructure is highly fragmented in many parts of the world. And it's actually extremely difficult in parts of the world, such as Africa, to actually transact cross-border. And that's something that is really not a problem for the crypto space. When trading in crypto assets, borders become almost meaningless in the sense that there is one internet, one single unified place where transactions can be recorded and settled. And so it kind of brings together the entire world on a common platform, right? And gives equal access to all peoples to opportunities to transact, save, really like touch on all basic infrastructural elements of finance, which includes payments, transfers, remittances, swapping between different assets, saving, investing, and borrowing against the assets that you hold. And so I think a point that you mentioned earlier regarding if there's 60 or 70 different crypto assets that are available readily to many Africans and others, is that really going to be a world in which it's going to be easy to transact? I think not so. It's not clear that that we'll have that many assets being used for the purposes of payments or any particular individual use case that is applied, or all use cases rather that are kind of consumed by a single cryptocurrency. But to Ian's point earlier, I think one element that's really interesting to speak about is stablecoins and the use of fiat currencies in a form that lives on a blockchain. We've got really clear evidence that you can transact much more cheaply, much more freely, and with great speed using a digital stablecoin than you can with traditional fiat currencies. So I think that's quite an interesting element to speak about, and for CFOs to keep in mind if they're thinking specifically about payments, and specifically about payments that are crossing borders between countries. I'll pause there.
Of course. Blockchain as an idea is amazing. A distributed ledger brings in so much transparency. But there is still a lot of doubts about successful use cases, especially for payments, because while on one hand, we have countries like El Salvador that have adopted the Bitcoin, there are countries like India and others that are not very clear on the regulation of Bitcoin or for these digital currencies or these coins. Yes, India also plans to come out with its own digital currency. But we've seen it in Africa, we've seen it in India, even blockchain technology coming through. We had digital payments. We've seen good financial inclusion happening because of digital payments. How does it all change because of blockchain? Ian. Ian, could you just unmute yourself?
Sorry, did you ask me,
Yes.
Anisha?
Yes, the question
I
is
just
for
missed
you.
it. So just quickly, it is a sorry, I missed some of the question that you asked, but just it is a noble idea, blockchain. And I'm very excited about it. I'm very passionate about crypto. And the adoption in Africa, similar to the rest of the world, we're leading actually. I think Nigeria and South Africa's got some of the most crypto buyers and sellers in the world. So as a cornerstone, I think crypto is leading the world and showing everybody they are actually viable use cases. But even from a sustainability perspective, I'm just going to, if you look at carbon credits, I spoke to guys in South Africa the other day that's looking at clean coal on a blockchain. So validating that that token represents real clean carbon credits. And that's what a blockchain does for you. It brings this immutable proof of the truth. So historically, we had a carbon trading credit desk at Standard Bank, and some people will claim for a carbon credit for the fact that they didn't chop wood. But the thing is, that cannot be a carbon credit. You should bring something into the world that reduces carbon footprints, right? So utilizing less coal, for instance. And I think that's where blockchain use cases are now proven, actually. We spoke to Salesforce and Adira that's got a sustainability cloud. And the Adira blockchain verifies that those credits that for investment purposes are available or for funding purposes are real, and it's been pre-validated. So I think, I'm not going to talk too much. I want Gian also to say a few things, but I see very real use cases this year. And there is a big drive towards stable coins. Another great example is the US dollar coin. It grew 10,000% over 2 years, 50 billion in dollars turnover. And if you look at that infrastructure that's been created, that can be utilized for a Rand coin, an Indian rupee coin, and that's already proven to be scalable, and it meets all the regulatory requirements in the countries where it's operating. So a big hurdle today is regulatory and compliance approvals, but I think the latest generation blockchains are building that in to their mainnets and their capabilities to facilitate people to do transactions that's trackable, traceable, and reportable for regulatory purposes.
Right.
I hope I answered your question. I missed some of it.
Yes, Anita is also with us. So Anita, Gian and Ian were putting their thoughts across on how blockchain is changing the payments world in Africa, around the world. So why don't you come in? Because it sounds so exciting for the potential that it has in Africa. Please go ahead.
I sincerely hope it's not going to get cut off again.
No, it's good. It's good. We can hear you.
If it happens again, guys, I apologize, because every time I'm on, when you hear me speaking, the video keeps going off. I don't know why. Well, it has happened again.
Just continue, Anita. It's fine. It's absolutely fine. Just go ahead.
Okay, all right. I hadn't done an introduction of myself. Let me just quickly do that. So I'm Anita Mkutumano, and I'm the Global Head of Operations for United Africa Blockchain Association. And I'm glad that at least, the whole panel is already, continuing with the discussion, because I'm not sure, had you already covered the use cases of blockchain finance and accounting? Are we still on that yet? Or are we on the next, discussion point? Anisha?
I reckon we can stick with the first. I reckon we can stick with the first question, Anita.
Okay, fantastic. Okay, hi, Ian. Hi, Gianluca. Unfortunately, now I cannot even introduce you guys. You've done it yourself. So yeah, pardon me for that. Hi, Ian. Hi, Gianluca. How are you guys?
Hello, Anita. Fine.
So Okay, fantastic, fantastic. Okay, so I understand that obviously within the setup of use cases of blockchain in finance and accounting, it really is it's very broad. Use cases obviously they keep on improving and getting better and better as the reasons for the uses for blockchain keep on expanding because like blockchain cannot. It's not like a static thing. It keeps evolving. And getting better and better and better. So, I mean, with regards to that, I'm thinking then if we are going to be having use cases that keep evolving, and within the blockchain sector itself, in the finance and accounting, in that case, so it's not static. The use cases are going to keep growing and evolving as well, because I mean, it's an innovative bracket within the digital sector in general on its own. So, I mean, I'm thinking on your side, Ian, looking at, the way things are and the way, blockchain keeps evolving and the way that we cannot always be focusing on a use case that happened, maybe say 2009, just as an example, and it will still be relevant in 2040, let me put it that way. What is your opinion on that, still these use cases, are they still going to be relevant within the blockchain in finance and accounting, or how do you weigh that out?
Well, I think for me personally, I was a CFO for many years in my life. And the double entry bookkeeping system, I definitely think if you do something on a distributed ledger in future, it's definitely going to be relevant. Because if you look at the existing accounting systems, they're very archaic. You've got a ledger in every single legal entity, and then every single business unit's got its own ledger. I don't think it's going to happen soon, but we've done an example of accounts payable and receivable. You don't need an accounts payable and receivable ledger. You can have one single ledger, because if I owe Gian something and he must pay me, I owe him something, and I must pay him. I'm his debtor and he's my creditor. Why do you need to book those things into two separate ledgers? I'm just going to talk principles. I don't want to convince people, but I think CFOs, from an accounting perspective, our accounting systems are 700 years old. It's very difficult to, I mean, when it was first invented, it's not 700 years old. It's very new. There's new software. You've got SAP, you've got all these systems that does the accounting for you. But it's not working on a decentralized capability. It's actually very centralized in a way, which creates bottlenecks. So if you think about Internet of Things or lots of cryptocurrencies, millions of transactions a second, and it needs to be validated. The difference between blockchain and distributed ledger technology and the way we work today, we do reconciliations retrospectively. So everything happens, we can do a payment in real time on our credit cards, but then subsequently there's a whole army of people that's reconciling to make sure that everything sits in the right account, if you know what I mean, and then it's audited by an auditor. If you have a single ledger, that makes it, you can pre-validate transactions. So what the revolution is, what blockchain brings, and that's typically what happens in a revolution. It moves from retrospective to proactive. So you check something before it goes and it gets put into the ledger. So if you build something like that today, I think it's going to be relevant for the next however many years, because that will facilitate Internet of Things and lots of transactions. Sorry for the long-winded answer.
No, that's fine. That's perfectly fine. It's good for us to actually talk about these pointers, because also looking at from kind of like the aspect of a layman's point of view, somebody who is going to obviously is participating right now, and then just an attendee, they would also like to understand that, okay, so blockchain is not static, things keep changing, which is, thank you for that. I don't know, Gianluca, what do you think in that aspect? That we've just, what are your thoughts?
I think Anita, it's spot on that the use cases in blockchain and specifically with cryptocurrencies are ever expanding. I think that means that there's different applications depending on what your use case is, what you're trying to achieve, right? So if I had to think from a CFO's perspective, the audience that we're kind of speaking to today, I'd imagine that there's a couple of key elements, right? So from a CFO's perspective, many CFOs are also capital allocators. And so for them, I think that there's an interesting application here for having greater freedom in terms of how you manage a treasury, if you're lucky enough to have one to manage. And then I think the second application that's relevant to CFOs is payments. So slick, very cheap, easy to execute payments that have great auditability to what Ian mentioned a little while ago. And then I'd call those like two major finance applications, right? For cryptocurrency specifically. If I have to think about the application of blockchain towards accounting as like a separate bucket, I think Ian's correct in the sense that there's probably some value in immediate auditability, right? Where you've got an independent party that can validate transactions immediately. This is something that Bitcoin does, for example. Then you can have trust and faith in the accuracy of transaction data immediately. So in effect, you just know right away that your transactions are valid, and an auditor can just sign off on the fact that the technology, the algorithm that is securing a blockchain works, and they've got comfort that every single transaction within makes sense and actually is working well. There's an interesting development here for anyone who really wants to dig in to understand, the consensus algorithms and how blockchains are secured. And the first thing that you'll find when you dig in a little bit is that transaction throughput on blockchains is not amazing, right? So something like Bitcoin has a low transaction throughput every minute. And what that means practically is that if you want to take hundreds of thousands of transactions and put that onto the Bitcoin blockchain, you're going to have a hard time. It's not going to be an easy thing to achieve. And you're going to get frustrated by the fact that you can't actually have a large amount of data on the Bitcoin blockchain. There's kind of two solutions here. The first is that there are other alternative blockchains that are also secure and able to provide auditability of transactions that have much higher throughput. Ethereum is getting there. If you think of something else like Solana as another blockchain, that's designed to have massive throughput in transactions, and maybe that includes storing information for businesses in terms of their transaction data and their accounting. Another solution is kind of distributing the consensus algorithm and the auditability of information to second layer solutions on blockchain. So the Ethereum blockchain is one where there's work being done by really smart people to kind of increase the throughput of transactions by distributing that to different layers of blockchain. So something like Arbitrum, as an example, is intended to really help support massive throughput of transaction volume on blockchains like Ethereum that have really good security. And I think that's the interesting element from an accounting perspective. For me, if I were you as a CFO, I would be focusing on the ideas of how do I manage my treasury using crypto assets, for example, such as stablecoins, where you don't have to expose corporate treasury to a highly volatile asset. You can save corporate treasury in dollars, which is in high demand in many parts of the world, and I think especially in Africa. And secondly, can you improve the ability to make payments to suppliers and third parties using dollar stablecoins as the medium to do so? So I think, that's a little bit on the point of the use cases that I think are really, really relevant to a CFO.
Okay, fantastic. Thank you so much, Gianluca. Thank you very much.
Anita, please, and Ian, please call me G, guys.
G.
Okay.
Yeah.
Okay, G. Okay, thanks a lot. Okay, so we just want to try and find a way of wrapping this up. Obviously, the previous thing kind of ate up a little bit into our time. So at this point, do you think can blockchain track expenditures in a collaborative and transparent way? What do you think, G?
Yeah, I think to be very quick, I think it comes back to the points that I was raising from an accounting perspective. I think it depends on what you're trying to achieve. Mm-hmm. So I think if you're going to try and use a blockchain to store massive amounts of data, that's not what a blockchain is designed to do. Really, a blockchain at its core is designed to help you transact with strangers over the internet in a way that you don't need to trust them, right? So if you
Right.
imagine, you can transact with anyone online. If you're going to be transacting with money, you want to make sure that that kind of transaction can be validated and secured effectively. And you don't really, the innovation, the beautiful thing about crypto assets is that you don't need a third party to get in the middle. You don't need your bank to come in and be involved to make sure that a transaction is recorded as a debit on one side and a credit on another customer's account. Instead, you can use a network to validate that transaction, and you can minimize the need for trust. So that's really the innovation. That's really the value of using a cryptocurrency and a blockchain by extension today, right? This may change, but I think I think like when it comes to using blockchain to track expenditures, I think like you're probably going to have a bad time, and you're going to have a better time if you can trust the party that you're dealing with to use centralized cloud infrastructure that exists today, like AWS.
Okay. Oh, fantastic. Thanks a lot, G. Thanks a lot for that. Ian, I think I'll throw this one right through to you. What are your thoughts? How can CFOs capitalize on the potential of blockchain? I think we can just kind of like wrap up on that as well. Yeah.
Yeah, well, I think Jean made the point very, very clearly. I think they need to look at stablecoin specifically, digital assets. I'm just going to mention high-level topics. And I definitely think crypto is here to stay. We as a bank are really looking at crypto, custodial services. There's brand new markets out there. And I think from a CFO's perspective, it's very important to stay very close to these developments in the market. And then I would also say, because your CFO typically works with the regulators, in Africa, Ghana, Kenya, South Africa, Nigeria are all looking to issue general purpose retail CBDCs, as well as wholesale CBDCs. We're working closely with the SARB, also on SARB debentures to basically integrate that whole value chain and combine it with stablecoin settlements. So those are things that's happening with the regulator. And I think CFOs need to talk to the regulators and be close to all those developments. That's the high-level view I'm going to give in this short space of time.
Thank you very much, Ian. G, thank you so much. I think we've tried to delve in and try to touch here and there. Obviously, we can speak all day, but obviously time will not allow us. Thank you so very much. This was really a very helpful and enlightening and very educative discussion regarding blockchain and basically how it's enhancing Africa's progress towards a single digital economy. Thank you so much. I think at this point I will call Anisha to take us to the next session for those who are going to be joining the summit. Thank you so much, G. Thank you so much, Ian. It was wonderful having you.